Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. I'm Michael Bull, your host to the world of commercial real estate. Thanks for being with us today. Today we're going to talk about retail and retail real estate. We'll cover sector performance, including occupancy, rental rates, and cap rates. We'll look into the Commercial Real Estate Show's crystal ball and see what we should expect to see moving forward in this sector. Then we'll share some successful strategies for both landlords and some for tenants. Please welcome my first guest, Dan Fasulo, Managing Director with Real Capital Analytics. Dan, thanks for joining us today.
Thanks for having me, Michael.
Well, Dan, retail has kind of been the trailing asset class, it seemed, as far as popularity with investors, but interest seems to really have kicked up, and it seems like it's picking up more all the time in our shop. What have you seen for transaction volume for retail so far in 2014, and how is it trending?
Well, retail is certainly not trailing anymore. Real Capital Analytics tracked about $37 billion worth of retail property sales in the first half of this year. That's up 57%
wow.
over the same time period in 2013. And it is the best performing sector by that metric at this point.
Well, that's amazing. So has that trend been over the last few years, or when did that start?
Multifamily and to a lesser extent CBD office properties really led us out of the recovery. Investor interest has been extremely strong for those property sectors, driving cap rates very low, especially for multifamily. And over the past couple of years, that wide yield spread that opened up between kind of multifamily and other sectors like retail and industrial has really attracted capital to the retail space, investors have been gobbling up, anchored centers across the country now.
That's great, and I know industrial's been hot too. So, where is retail in the volume for these other asset classes? And put it in perspective a little bit, is retail way ahead in volume this year?
Well, a multifamily, and office properties, just because they're larger, sometimes the dollar amounts get bigger. But to give you some context, over the past, 12 months, we've tracked just under $80 billion worth of retail property sales. That's just under where we were at the peak in 2007. We maybe did $90 billion over a 12-month period. Wow. So as far as transactional activity, we're kind of back to where we were.
Well, that's good news. And so what's that doing to cap rates in the world of retail?
Well, obviously, as capital has flowed into the sector, it's really driven cap rates down once again. The biggest compression has been in the major markets. Your sexy six metros, as we call them, Boston, New York, D.C., L.A., San Francisco, Chicago. Lately, some of your kind of top-tier secondary markets, I'd put Atlanta in that camp, the Texas markets, even places like Denver and Phoenix have seen significant cap rate compression as, capital's chasing those yields wherever they can get them right now.
Yeah, well, that explains why we're seeing more activity down here in the southeast in some of these cities. So what are some example cap rates for, say, for malls or for retail strip centers and things?
For your fortress-type malls, we've seen ultra-low cap rates. Certainly hitting anything we saw during the last peak, 5% or lower for your, premier assets. Nationwide, your average strip center is trading at around a 7 cap. Obviously, that varies greatly depending on where you are in the country. Where we've also seen kind of significant cap rate compression has been in urban retail. which we've seen a corresponding explosion in rents and demand from luxury retailers in certain environments around the country, and it's investor optimism is off the charts for certain types of urban retail right now.
Well, that makes sense, too, with all the apartments going in some of the urban areas of the major cities. And we're talking with Dan Fasulo with Real Capital Analytics about retail real estate. And Dan, what do you expect for retail sector cap rates moving forward? Do you expect slightly more compression, or might rising interest rates affect that? What do you see moving forward?
Going forward, it's going to be a battle between improving fundamentals and rising interest rates. Mm-hmm. And I'm not sure who's going to win. I personally would be a little nervous with an asset where the income was locked in over the long term, where you'd basically be at the mercy of rising interest rates, and it could negatively impact the value of your property. I'm certainly advising some of my clients to look for a little upside to capture some of the improvements in rents and occupancies that we're starting to see around the country.
Well, I think that's good advice. What's the old saying that pigs get fat and hogs get slaughtered? It might be a good time to sell some of these assets. So what do you think about the sentiment of people in these institutions investing in retail and how they look at other asset classes? You get to talk to these investors all the time. What do they tell you about retail right now?
At the institutional level, commercial real estate in general is a value play versus the other asset classes. As real estate folks, we kind of gasp when we see these ultra low cap rates, but when you're working with a pool of money that's looking at the bond markets, our yields look really attractive. And institutions understand retail properties and the nature of the credit that occupies these properties. It's pretty intuitive. There's a lot of kind of publicly listed retailers that have a track record in a corporate bond profile that people can digest. So institutional interest in retail properties has come back significantly. And we see a lot of localized owners taking advantage of that right now, and selling either full or partial stakes in certain assets that appeal to that crowd.
Well, that makes a lot of sense. And then you also have a kind of a lack of new supply going on, right? New construction of retail hasn't really ramped up to the good old days, has it?
It's the undertold part of the story, Michael. Over the last kind of 5 years at this point, away from the downturn, there's been, at least on a macro basis, a historically low level of new supply added to the market. And as we have seen a pickup in the economy, and retailers' balance sheets are back in order, and many are starting to expand again. It really is a good indicator that we could see some rental growth. That said, there are certain markets that always make me a little nervous. But especially in the supply constrained markets, I really think we could be moving into a period where fundamentals grow pretty strongly. Okay.
So from what you're hearing from investors, they feel pretty comfortable about a rise in rental rates in most of the markets, and also with increased occupancy, right?
Yeah, it's going to mirror the improvement in the economy.
Okay. And talk to us about the debt market and CMBS. How's that affecting retail real estate?
Well, the availability of debt is a big driver in transaction activity, recapitalizations, and there's no question that lenders have become more willing to lend in secondary geographies for non-core properties, and the ability to borrow is helping to drive sales activity right now. Especially the CMBS market has been very helpful in secondary markets around the country.
Yeah, that's good news. Well, Dan, thanks for joining us today. We appreciate you being on the show.
Thanks, Michael.
If you like more from Dan Fasulo and Real Capital Analytics, visit rcanalytics.com. They provide great information on investment sales throughout the country and in other countries. Well, stay with us. We're going to have more on retail and retail real estate, including some strategies for landlords and tenants, and we'll look closer at malls. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Florida International University and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.